we are just at 1,000 crore AUM. Overall market, if you look at it, it's close to 10 lakh crore plus market, and a 2 lakh crore plus market is here. Almost every vehicle financier is a lender to us in some form or the other, which only, gives us that personally a confidence saying, okay, I think we're doing things right. We are more into the first time buyers, first time users. They don't have any income proof. So we are basically lending only on the branch manager or the executive's assessment, right? Vehicle valuation. So if you look at our credit, it's very simplified. About 15 to 16 questions is what we put in. Level 3 and above employees, almost 70% of the employees are working with us for more than 6-7 years. If you ask them what's the AUM in 2028, they'll tell you 5,000 crores. So equity and debt is important. The right mix is very important.
Most professionals sometimes end up drawing a line between professional world and like the personal front. But in a family business, you don't really have the choice. So how did you function as a family unit?
We were initially into new vehicles. In the 96-2000 era is when we had seen a deposit run. And then that's when Deepak and me joined the business and said, okay, now you need to close down branches, bring back the money, pay it to the public depositor. Key highlight of those eras and the way dad wanted to run the business was the norm.
Welcome to the Day One podcast by Elevation Capital. Today we have Deepak and Praveen, who are the promoters of Mahaveer Finance, which is an NBFC based out of South India in the used commercial vehicle and passenger vehicle space. Today they are more than 1,000 crores of AUM with more than 80 branches across Tamil Nadu, AP and Telangana. We recently invested in Mahaveer Finance in their Series C fundraise. The company's grown remarkably over the last 8-10 years, from around 50 crores of AUM in around 2016 to more than 1,000 crores right now, while maintaining strong asset quality, profitability, and operating efficiency. Deepak and Praveen, we are thrilled to have you here.
Thank you so much, Ishwar.
No, I think let's start with just the story of Mahaveer Finance, right? Which is fascinating company that was started in the early 1980s. So just take us back to the early beginnings. How did the family business really take shape, and what did the market look like back then?
So I think to just start with, in 1987 is when dad took over this company, and with a very clear vision that he wanted to expand and make a large institution out of it. And prior to that, he had seen scale. So, he was with that intention in his mind. Offloaded some stake to UTI, started with his liability franchise with SBI, accepted public deposits, expanded into Maharashtra, Madhya Pradesh, Kerala, Andhra, all of that, and then grew at the back of it. And obviously, that set the tone, tempo for us. The few things that, he as a business or as an ecosystem wanted to build out was governance, and that was one of his core strengths. Right from day one, wanted to maintain the highest degree of governance, have very, very prominent people on the board. To our last chairman, Mr. G. Chidambaram, he was the retired MD of LIC. So that was the way he wanted to build the business, and he built it organically through leverage. Those were the times when leverage was almost at about 20 times is something that vehicle financiers used to do, and we also did that. That kind of was the way it was. We were initially into new vehicles. So new vehicles, doing business across these places. And then in the 96-2000 era is when, we had seen a deposit run. That was a pan-India presence. RBI, made regulatory changes, which kind of made things difficult. And then that's when Deepak and me joined the business and said, okay, now you need to close down branches, bring back the money, pay it to the public depositors. Key highlight of those eras and the way dad wanted to run the business and the way he ran the business till I would say 2001 was dividend was the norm. So give out a 16% dividend on a regular basis, keep the shareholders happy through the dividend payout route, manage with liability, 20x leverage, all of that. While doing all of this, just make sure that there's apt governance so that your feet are on the ground. And that's how he cross that journey. And then when we came in, the agenda was to, initially the need of the hour was collection. So both of us got into collections. He moved to Kerala and Andhra. I moved to, Bhopal, where I was handling, Madhya Pradesh and Maharashtra. And then, repaid the public deposits in the next 2-3 years and then moved on from there. So that's how the entire journey started. And we were built for scale, but then obviously had to face the market challenges and then, kind of stalled our growth comparatively.
I think 2-3 things just wanted to add here was, I think one thing we learned out of this, the journey what we had was building relationships. Dad was very strong in relationships, was always, any NBFC industry, he always says that, we are a supplementary, complementary to each other. We are not competitors. So, that been one of the key facets which were. So, whenever we had a challenge, we could always approach another NBFC. I think that was one great thing. Second, I think, is commitment. So, he used to always say, the commitment is very important today. Zaban ki value, Marwadi mein they say, what you say is very important. So, we always kept up the commitments. Whatever we do, make sure that the commitment is honored. So, when there was a challenge in the deposits also, he said, see, if they're asking the money, give it back. Don't ask, don't tell them anything. Business will slow down, it's okay. So, that's how we've been built, our culture has been built. And I think one more thing in this journey of ours has been, a learning has been that equity versus debt. Somewhere what we understand from this business is, this business is, the sky is the limit for this business. So it's how much you want to do and what you want to do, and how much you want to invest from yourself, how much you want to borrow. So that's how we have done different journeys. We've seen private deposit lending, then repaying, then we have seen secured, term loans, then the securitization era was there. And then, of course, now the equity era, of course, which we have just started in 2016 and 18 onwards. So I think this was a bit of learning for us.
And how was it working with your family members, with your brother and your father? Because it's super interesting. Most professionals sometimes end up drawing a line between professional world and the personal front. But in a family business, you don't really have the choice. So how did you function as a family unit? How did decisions get made? And how did you kind of discuss key issues? Would be super helpful to understand.
So I think it's very interesting question. A lot of people do ask us. So it is challenging, right? So one is, there is a difference in the generation gap. So dad's way of looking at things and our way of looking at things is very different. But one thing we understood is that, see, end of the day, we all are working towards one motive, that is to make profit and grow the business. So in the first few years, we tried to understand what he was telling us, and then after that, we started building that I can handle this and give me a chance, so I'll handle this. And then that's how we handled it. So I think it took time, because he's also built it brick by brick. And so he was like, I want this way. So, and then from that, you please take it ahead. So, that's the line which got changed slowly. And decision wise, if you look at it today, we all three sit in the boarding room. Maybe I'm the managing director, he's the DMD, he's the executive. That's all okay. But as a family, when we sit together, we always, whatever is there, we deliberate. We are the devil's advocate. If I have an idea, he's going to say few questions which is negative, and then he has. So that's how we've been doing it. And then finally, all minds don't think alike, right? So in between us, we have said 2 out of 3 votes that's passed. So that's how we've been working, and God's grace, it has worked very well for us.
And how did both of you end up dividing responsibilities between each other, right?
Again, I think we've been lucky, I would say. And I joined the business first in 1996. I joined, and I was, of course, that time we were majorly into collections. Then we got into used vehicle business. So we started a trading company. So I used to go into the more of the trading wherein I used to handle the sales and all that. So typically, I was able to do more of selling. So when Praveen joined in, we felt, okay, he can take the collections front. So So we can complement each other, because the sales guy and the collection guy being separate always is better. Otherwise, the emotional things come in, when sales are required. So that we used to always keep a balance between us. And as we started growing, we understood that end of the day, if you want to build a company, the asset and liability both are important to have a strong balance sheet. So we thought, okay, I'll take the asset, and Praveen will take the liability side, and the finance side. And so that's how it's been growing.
Now let's come to this 2015, 2016 phase where you started kind of now taking over the reins from your father. So again, how did you think about like key priorities from then onwards, right? And especially in the context of family businesses in India, where in general the tendency is to kind of keep it closer within the circle. So, and people are a little bit more wary of kind of opening up the cap table to external investors. So, how did you think about some of those decisions, and like how did the transition happen, and what were some of the key priorities for you from that phase onwards?
So I think, 2012, I think 2008 for the NBFC industry was a slightly changing moment. And then 2008 to 16, we had seen some success, not personally for us, but as an NBFC industry, right? So 2012, when Banyan Tree approached us, Dad was obviously, not ready for a decision. It took us about 4 years, to convince him and to convince ourselves as to, this is the right way forward. So the first thing that we did is, we went out to the market. We went out, spoke to the larger NBFCs, larger banks, now a bank, then NBFCs, couple of them, couple of people who just recently raised equity and all of that. And then, kind of figured out that, so prior to that, there has always been a notion or a myth saying, equity investors are like this or like that. So obviously, those myths and shackles had to be broken. So we did all of that, and I'm being very candid, that's how the picture was painted prior to that. So unlike today, after about 8 years of seeing that in the boardroom, we feel, yeah, I think we'll wasted 2-3 years not doing it. But so that was the key change, and what helped was, like Deepak said, right, the relationships as an NBFC industry, with Dad's goodwill that he built out, the relationships helped us a lot, because we could go to any one of the MD's cabins and knock the door and talk to them and have a candid conversation of, boss, what really happens, guide us. The second point, what was also very critical, is that prior to that, we were controlled. So we were controlling everything directly. When you want to build an institution, you build a team, and team comes first in terms of institution building. So that portion of it, how people have done in the past, what are the key matrices that we need to keep in our mind in terms of how do you take it forward? So one common thing that, between Deepak and me, whenever we go to those meetings, the idea was, we tell them was, please guide us as to the mistakes you make. If you spend 10 rupees on it, how can I do it with 5 rupees of cost? That's the core, and always the advantage of being the younger brother, because, you have people ahead of you who've done something, and if they can share it, you actually land up saving on your, we call it internally a tuition fee, you save up on that tuition fee. So that kind of was the way we, between 2012 and 16, the way we thought about it and all of that. And then finally, Dad said, you guys take a call. You take the mantle. Very, very clear. There is only one word that I'm leaving out this to you, is commitment. And the other, which was a very interesting proposition and a precondition that he had, was that, get yourselves delisted. We were listed then. Drop the deposit license, because you're anyways not accepting deposits. We had some private businesses because we had a lot of time. So close down those things. Trading is a distraction, although it's a feeder to the business, but it's still a distraction. Close it, and then accept the, equity, because then you look at, wealth creation out of this, rather than just look at profits, because trading is a very profitable business. So, and you see the money every day. So that's the one difference. And then that's how we then decided, okay, let's move ahead and start this journey, start building out the institution.
I think another point to add here was, our mindset was, from profit to creation of wealth. I think something which was which is something which drove us as well, right? So as we started growing from 96 to 2016, 20 years of experience we have done already. So we understood the business now, and this business is somewhere, money, it's raw material, finished product, both is money. So how do you get there and how do you scale up there? And seeing different cycles, once upon a time we had a 30 crore AUM, then we went to 80 crores. And then we again came down to 50 crores. Right. So it was basically, every time the market changes, we had a challenge. So we understood, somewhere we need to balance this out. So equity and debt is important. The right mix is very important. So I think these were the learnings for us in those 1980s to probably 2016, all these different cycles, multiple cycles we saw and learned, and we understood this. And then I think right opportunity as well came. So somebody who has, most of the investors who have backed us, all have been investors who have backed bigger NBFCs who have grown like us. So that's been one of the biggest, I would say, the blessings for us, or the advantage for us, which helped us. And I think that's one of the reasons why we are able to grow as well now today.
So let's talk about the used vehicle segment a little bit, right? So it's one of the most complex segments within lending. And every micro market has its own set of nuances, which models will sell where, what LTV to give. And it's very difficult for newcomers to come and crack the space. And even if you see in India, there are probably 15 odd NBFCs, including the likes of Chola, Shriram, Sundaram, who are just operating in the space. So can you just talk us through the process? How do you kind of build this whole institutional knowledge, expertise, and capabilities to be able to kind of underwrite and play in this segment? It would be super interesting to understand that. Yeah.
So, in 2001 is actually when we decided to get into the used vehicle business. So as you rightly said, it's one of the most challenging thing in this business is the vehicle valuation. Right. And so many combinations are there in that vehicle. So that's when we decided, let's start a trading company. Let's backward integrate. How do you get the vehicle? How does a customer buy a vehicle? So let's start that so that, you understand it. So that actually really helped us. So we were one of the biggest dealers in South India for used commercial vehicles. We used to buy big vehicles in lots, sell it. And the biggest thing was when we sell the vehicle, we used to finance the customer. So the exact margin which he used to put is what we realized, and we understood the value of the vehicle. This actually helped us in growing this business today. So there are, as you rightly said, there are a lot of combinations here, permutation combinations. For example, if you look at a commercial vehicle, there's an open body, there's a closed body, there's a puff body, there's a container body. There are 4 variants. So, the vehicle value differs from 25,000 to 1.5 lakhs on the value of the vehicle. So these are some things which only comes out of learning. A lot of tuition fees as well we have paid, made mistakes. And now as we have started growing this business, we have entered new states as well, right? So we were masters in Tamil Nadu because we used to do the trading business there. In AP, Telangana, it was a new learning for us. So the AP and Telangana market is a bit different. So again, we went in there, we understood, we made a few mistakes, few learnings. For example, Ashok Leland vehicle does very well in Tamil Nadu. Tata never does well. But it is vice versa in Andhra. Tata does very well there. So when we created the grids, we made that mistake. So what happened is we lost a bit of money as well. So these are the learnings. And one thing we always understand is, we go into any place, how much ever data you read, how much ever online, offline data you take, unless you don't go into the market, don't do the business, don't dirty your hands, don't lose some money, I would put it, then that's when you learn the business. So we always used to believe, we'll start with a 2%, for maybe 5% of our business we will do in a new area. For example, now this year we just entered Karnataka. So in this year's target of 1,000 crores of disbursement which we planned, we are looking at about 30 to 40 crores of business in Karnataka. Because everybody says Karnataka is great, everything, right? But the culture, the repayment style, everything will be different, right? So we thought, okay, let's understand this. So that's how we do. We keep course correcting ourselves, looking at the mistakes. Every month or every quarter we review it. We have built a process, and based on that is how it works.
And generally the debate usually is like growth versus profitability, right? So Again, philosophically, would love to get your perspective. How do you think about the trade-off between growth and profitability?
So fundamentally, see, growth and profitability always comes hand in hand, right? It's just a question of when do you start investing and when do you start reaping the benefits of it. So at every phase, the way we've done this over the last 8-9 years is invest. So it's a try, correct, and then scale kind of model. And vehicle finance or any financial business is that way, because the moment you enter a new product, a new geography, we have to do that. So that's how we focus. The only thing is we've been a little more disciplined in terms of trying to say, okay, we'll try with 5% of that, and then that 5% gets almost 50% of the attention of either me or Deepak. So that's kind of trying to make sure that that 5% you don't lose extraordinary amounts. So overall credit cost then is, retained at a decent control. And other thing which is very critical in this business is simplifying the business to the last level, because it's a business of productivity. It's a business of TAT. So these two aspects is what we've always wanted to focus on while we keep growing. Learning is a very, very big part of our ecosystem. In fact, most recently we've started a new journey, which is a 10-day, 5-10-day kind of program for new joinees to come in and do this. And it's a 3-month exercise where they come into the class, go back to the field, come into the class, go back to the field. So that's the only way that you can do it. And the last bit, which is very, very critical in this, is the HR. Every time you get a new person in, you train, you spend money on it, you have to retain him. The more you retain him, the better it is for the profitability of the company. So that's something that we've tried to make sure that we have a deep focus on to have it. And that's one of the reasons why our attrition at an industry level is fairly below the industry level, because that's one of the core elements that we focused on. And that's how growth comes, but at the same time, try and maintain the profitability that is there.
Another thing is, as in this business, the opportunities are huge. I think the most important thing, as Praveen also said, is right, the people, the team. So what we have done is we've always been very transparent. From 2016 onwards, we've always been very transparent with the team. Every team member of ours knows what is the AUM. Every year we'll have a town hall. We spend time with them. Quarterly targets are given, where we are standing. If the company is raising an equity, what is it? What is the next 3 years plan? Every MFIL employee will know, Mahaveer employee will know about that. And we also, I think, two, three key learnings, what we have understood from other players is, what does an employee look for? One is growth. Second is money. Most of the two things are very important. Rest all okay, culture, all that is, of course, integrity, all that is part and parcel. So what we have always done is we always showed the opportunity. For example, we share the OD chart of the company every year with the team. Say, these are the slots available. Now, who's performing? Please take it. These are DRO, KRA, KPIs. So, that's how we've been working. We give a lot of importance to people who are internally. And in this business, I think it's very, very much of culture. Because giving money, taking money, it looks like a generalized job. But, there's a lot of culture involved in it, service involved in it. So we believed always in that. And if you look at our top team members, right, from 2016 till now, almost our level 3 and above employees, almost 70% of the employees are working with us for more than 6-7 years. So that's been the culture. They know in and out. If you ask them what's the AUM in 2028, they'll tell you 5,000 crores. So, that's the kind of thing. We start the meeting with that. So that's how we built the culture.
No, that's super impressive. And I think the attrition numbers speak for themselves. But again, just drilling down a little bit on that, right? Because this people and culture is such an integral element to kind of building a financial institution. So how would you describe like the key core values as well as culture at Mahaveer, right? Like how would you articulate what is culture at Mahaveer and what are the core values that are fundamental to the organization?
So just to share is, every new employee of the company is, personally, we have a one-on-one meeting with the MD. Personally, we meet the employee once a month. So that's something we call it coffee with management. So we spend time, we share our vision, we share what we are looking at. And all the credit teams, everybody meets them, so we make them very comfortable. Second is, in this business, when we are lending, the most important thing is, because we are more into the first time buyers, first time users, they don't have any income proof. So we are basically lending only on the branch manager or the executive's assessment, right? Vehicle valuation and branch manager's assessment. That's how it works. So we try to bring a very transparent mechanism of work. So if you look at our credit, it's very simplified. About 15 to 16 questions is what we put in, and the customer knows whether this customer can we fund him or not. It's typically just on the app he will get to know. So that's the kind of things we have built it for them. So what happens is, something is commitment. Now, and even an executive at the field level, an FOS, if he is knowing that I can fund this guy, if he gets an approval, the TAT improves, his confidence improves. So that is what we have done, we have built. So for us, we always say, everything should be transparent. And today, any employee can call us anytime. We are always available. We're part of all the groups, WhatsApp groups and everything. That's how we built that relationship, being very transparent. So there's something like, it's a very independent, you can work, and you're always approachable to the management. This is the culture which we have built, and that's, I guess, helping us.
So just the last bit on that would be, the word commitment, right? Now, that word commitment sounds superficial right at the top and all of that. But if you look at your level 1 employee, for him, his entire respect in the market is, if he makes a commitment, does he honor it? And that is what is one of the things that, once we are able to explain to him what he can do and what he cannot do, and if he's able to transparently talk to the customer and say, yes, this is doable, and if he's doing it, 9 out of 10 cases, he should be able to do it. If he does that, the respect that he gets, the self-esteem growth that he has, is kind of a different level for him. And that's what is actually something that we've strived to do. Even in our tech piece, what we've tried to do is to do that. It is purely a very simple thing that, ask these questions, you'll get an answer, communicate the answer well enough, and, you can move forward. End of story.
Oh, that's, I think, very, very powerful. And as you're looking to kind of, over the next 5-10 years, looking to build the team, next level of leadership, right? Like, what are some of the qualities that you would look for in future leaders of Mahaveer, and how do you kind of build and empower them from within the organization, right?
So what we typically do is, today we create a lot of training programs for the employees, and we also have something called a half-yearly appraisal for the employees. So in Mahaveer, people say that there is yearly appraisal in most of the places, but in Mahaveer we have 2 appraisals. So somebody misses the bus in March, we say you have a chance to even get elevated or you get an increment in salary in October. So that is something which we follow, which attracts a lot of people. Sometimes due to personal reasons or whatever, they miss the bus in March appraisal. So that is one. Second is, we also create these roles wherein we know that this guy is a good performer as a HipPot, or he's the top performer for that area. But the competencies required to go up to the next level is very different. For example, a branch manager handling 3 executives in that area is a king. But now if he wants to become a cluster manager in our language, wherein he handles 5 branches, he has to travel to 150 kilometers, have to handle a different market. So there the competencies are very different. And he's a great branch manager, but will he be a good cluster manager? The competencies are very different here. So what we have done is, of course, out of learnings, a great branch manager, we promoted him, you've done a great job, and he's very happy. But he fails as a cluster manager because he doesn't have the competencies, nobody's trained him. And then actually we lose one good branch manager and we create a bad cluster manager. So this is something out of our learning which has come in. So what we do is, once he is capable, we handhold him. We call it a cluster readiness program, a state head level readiness program. We handhold them. We create that learning, build that competency for them and give it. So this is something which a lot of our employees have appreciated. And we believe very strongly we want people internally to grow and accrue. I think that is one thing which we have done, and employees really like it. People who are here with us.
I think that's I think very again powerful way of looking at it. Now, just wanted to shift focus a little bit to the liability kind of side of the equation. So again, for an NBFC of this scale, the kind of lenders that you have and the liability base that you managed to create is super impressive. So what are some learnings there, and how did you navigate this side of the equation?
Historically, because again, we've been in the industry for long enough. We've always, in the past, one of the key mistakes that we did was over leverage a tool or a lender, which is, say, in 96 public deposits, which was 70% of our liability. In 2012, 90% of our liability came through securitization, and both these times RBI came in with a new rule, whatever, and then everything just changed. So that when we started off, said, okay, let's take the liability franchise. In one thing that we need to do is diversify, not have any single product or lender be the largest one. It played well for in a few situations for us. It also bit us in a few situations, because when we look at our lowest cost of borrowings and we wanted them to scale up, they would the difference between me and the next guy is substantial, right? So the quantums changed quite a bit. But the idea was that the other thing that, as a challenge, as an institution, again, this is something that is God's been kind, but we always appreciate money given by a competitor. Because if you look at today in the vehicle finance business, almost every vehicle financier is a lender to us in some form or the other, which only, gives us that personally a confidence saying, okay, I think we're doing things right. So that's something that we focused on, and that's one of the reasons why we diversified and kept all the bases clear, right from NCDs to PTCs to some direct assignments, all of that. So that was one of the core thought processes behind that.
Now, as you're thinking about the next 5-10 years, right? What is the overall vision for Mahaveer Finance, both near term as well as more long term? How do you articulate the vision for the company and the organization?
So mission is always for Mahaveer has been to create value. So we believe very strongly if we want to create lifetime value. So let it be a customer, let it be an investor, as a promoter, as employees. So our focus has always been that, and that's what we're looking at, from 50 to 1,000, and then now from 1,000 to with maybe up to 10,000 crores is what we are looking at now. So I think the idea is that. And second thing is, we believe in we want to cater to the unserved and the underbanked customers, which are typically the rural tier 2 to tier 3, tier 4 cities. So that's, I think, a huge market which is available, which we want to cater to. And I think there's a huge scope available there as well. So that's going to be our focus. And today we are just in close to 4 states, including Karnataka. And these 4 states, these 4 states contribute more than 20% of India's used vehicle market. And we are just at 1,000 crore AUM. So, overall market, if you look at it, it's close to 10 lakh crore plus market. And a 2 lakh crore plus market is here. I mean, of course, data says that. So that kind of opportunity is available in the market. So I think we just want to continue be in the secured space. Slowly also we would like to add another product, probably, something which is closer to our heart is the MSME business. We believe in being in the secured space. So we would like to add that product as well. So, create few levers of growth. I would put it, one is, add more products in the vehicle. As every year we've been adding one product. So last year we added construction equipment. Maybe this year we're looking at adding tractors. So we have got 6-7 variants. Then even the customer type, as the ratings are going up, the investors are, we are getting the confidence. So what happens, our cost of funds have come down. So we are able to cater to the second level of customers, which are the SRTO, MRTO combined, where the IRRs are slightly competitive compared to this. So I think that's one avenue. Our existing customers are actually going out because we are not able to cater to them because of the IRR front. Now we can retain them. So that is going to be the second tool for us. The third is geographically, yes, we have entered 3 states. Now entering the 4th state, we'll also look at adding another state. So I think that will help us. And of course, the new product MSME lab business is something which we are looking at. I think these 3-4 boxes, right now we can think only for 5 years. So I would put it that way. But yes, this is a legacy business for us, and we are looking to take it longer ahead.
And in this journey, what's the framework that you applied to look at potential investors, and what made Elevation the right partner for you?
So I think we were fortunate that the first 2 investors who came in with a lot of experience of the brick and mortar, traditionally, and seen journeys of some of our older brothers, I would put, in the industry. What differentiated us when we looked at Elevations was that, a little more new age thinking, very clear thought process in terms of, what is it that we want? What is it that you look at? So one of the things which was very impressive when we chose, and at that point, honestly, we had a couple of other term sheets around with it. The one thing that we really appreciated about Elevations was it was a very clear thought process and very consultative approach in terms of being clear, talk, close things on the table kind of approach, and that kind of felt very good because, see, as a business, when we do a fundraise, what is one thing about a fundraise is it actually chokes some of the bandwidth that you have, right? So that is something which was squeezed out, saying, okay, I don't need to put in more bandwidth into this, now just move into execution. So that was something which was very, very critical for us. And the last bit is obviously going forward, I think technology plays a very big role when you want to continue to control your OPEX to improve your profitability. And that's something that, with the portfolio that, Elevations has, we thought, it'll be a very good partnership in terms of bringing out some of those learnings that you guys have in this.
I would like to probably ask one question is that why is Elevation decided to invest in Mahaveer? I mean, it'll be interesting for us to know as well.
Right. No, see, I think we were super impressed right from the first meeting we'd done, I think July, August last year. I think what stood out for us is just the what can you say, the thoughtfulness of the design choices that you had made, clarity of thinking, and just the very prudent and risk-first approach to underwriting and very stellar corporate governance, right? And of course, the numbers were speaking for themselves, right? Both in terms of growth, profitability, and asset quality. And all of this in an industry which is inherently very complex. So that was super impressive for us. And I think all of this just gave us the confidence and conviction that the company is poised for the next phase of growth and transformation. And we are super thrilled to be part of this journey.
So that, I mean, thank you so much for, those kind words, and it only adds more pressure on us saying, continue this. But I guess we're in a disciplined business, and we just have to be working with the same discipline and continue to grow with this.
These kind words actually install a lot of confidence also as to us. So it's a good way to, grow it now further.
Again, thank you so much for taking the time, and we're super excited for what's.
It was a pleasure, and you've been a great host.